On to work together 13-2. The first thing we're going to do is it says use the selected payroll information from employees' earning records to calculate the FUTA taxes. Unemployment tax rates are owed on the first $7,000 earning for each employee. Okay, so when we look at this, we're going to take a look at this first thing. It says, here's our employee's name, prior accumulative earnings. So this is how much they've made up to this point. And you can see what we're looking at, the first 7,000 of each employee's earnings. So you can see that this one, Nick is close. Nick is close with his. This one has already reached 7,000. This one's quite a ways away. This one's pretty close to the 7,000 earnings. Okay. Then we're going to look at the next thing is the earnings to equal the tax base. So if we take $7,000 minus that, we will come up with $900. Again, this one is over $7,000, so we're good there. If we take $7,000, which is our tax base, minus $4,380, we'll come up with that. And then we take $7,000 minus $6,850. So only $150 is left on the taxable base for that one. Okay, then the next column is earnings for the current pay period. So in this column here, this is what they earn this pay period. Now we're going to figure out what our FUTA earnings are. Okay, so we're going to take a look at that. You can see that Nick earned that amount, and he still has up to $900 that are taxable. So his entire paycheck is federal unemployment taxable. Okay, then you look at Evan. Evan has earned that dollar amount. He has already reached his $7,000. So therefore, 0 is taxable, federal unemployment taxable on his paycheck. Going on to Virginia, she earned $527 this pay period. She still has $2,620 till she gets to the tax base. So therefore, her entire check is federal unemployment taxable. Then you have Carrie. Carrie earned $849.50. He only had $150 until he got to the tax base, and so therefore only $150 of his earnings are federal unemployment taxable. The next step is to total up the two columns here. The first column, if you add up all of those numbers, you will come up with $3,179. That is how much your pay period, the payroll for this pay period was. And then your federal unemployment taxable earnings is $439.50. Step 2, it says to calculate the amount of employer payroll taxes owed for May 1st pay period. Use the employer payroll taxes provided. So we just figured this top portion out. We went through and we figured out our taxable earnings for our payroll and our unemployment taxable income. All right, so now we're going to fill out the bottom portion of the screen. which is down here. Our Social Security tax payable is our first one. Our Social Security tax, remember, it is on the entire earning for the pay period. Since none of our employees have reached the $108,000 of the tax base, all of it is subject to Social Security tax. So we're going to take $3,179 times the tax rate right here of 6.2%, and we come up with $197.10. Our Medicare tax does not have a tax base, so we are using the entire earnings for the current pay period. That's right up here. $3,179 times the tax rate of 1.45%, and we come up with $46.10. Our unemployment taxable income now, we're going to take a look at this amount right here because that's our FUTA earnings. And we're going to figure out the next two taxes, and that's why we figured out the chart up above there. So unemployment tax payable is $1,439.50 times 0.8%, and we will come up with $11.52. Remember that if you're using the decimal, it's 0.008. Then we're going to take our unemployment tax payable, and again, we're going to use our FUTA earnings. So therefore, it'd be $1,439.50 times the rate of 5.4%, and we will come up with $77.73. Moving on to the next part is you're going to total your payroll taxes because this is an expense to your business. We add up all those numbers and we come up with $332.45. So your table should look like this. Part 3, we are going to journalize payroll taxes. And it tells you here, journalize the employer's payroll taxes for May 1st through the 15th pay period. On May 15th of the current year, used a General Journal 10 and Memorandum number 46. Okay, so we are going to take the payroll information from up here and transfer it to our General Journal. Okay, so our first one that we're going to do is total payroll taxes. Since total payroll is an expense, that's going to be our debit amount. So we write the date, May 15th, payroll tax expense, and $332.45. Remember, we're using the General Journal because we're not paying cash, we're not receiving cash, we're not making a sales transaction or a purchase. Okay, our second one that we're going to deal with is all of our taxes. So we're going to go Social Security tax payable. So we'll write that one next. When you use a General Journal, you should indent your credit entries a little bit. Okay. And I know you don't have much control over the computerized, but just notice that. Okay, so Security tax payable, it's a liability, so we're going to credit it. Next is Medicare tax payable. Oops. So we'll put Medicare tax payable. We'll credit that. That's a liability. We're going to owe that to the government. Unemployment tax payable that we figured out comes next. And remember, it's unemployment tax payable and then a hyphen with the federal. And that's $11.52. And our last one is unemployment tax payable state. That'll go there. And we will credit it for $77.73. Source document, Memorandum 46.